My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Happy Friday. My name is Gareth Soloway, and this is my trading game plan. All right, guys, we're going to get into the nitty-gritty here. We have a lot to cover. The markets yesterday getting walloped again. Technology leading the way down. Bitcoin obviously crashing yesterday, getting as low as 60,000 before bouncing into today. Now, this is interesting because Amazon reported poor earnings yesterday. Now, their earnings were okay, but their guidance was weak, and the CapEx, what they're going to be spending in 2026 is huge, $200 billion. You add up the major mega cap, the Magnificent Seven, it's over $1 trillion in spend. Now, you might say, isn't that great for the economy? Well, if you look at the AI sector as being just the entire economy, sure, this is why GDP shows up as being 5% right now, but that is faulty because a majority of us don't feel that in the AI sector, right? It's very niche at this point. But bottom line is markets are beginning to be concerned about jobs growth. Yesterday, we got the Challenger jobs cuts numbers. It was the worst amount of job cuts in January 2026 since 2009. In addition, jobless claims did uptick as well. So lots of negatives out there, and that is sending investors running. Now, today we're bouncing back a little bit, but we'll see if it lasts. Let's go into the charts and take a look here. So this is the S&P 500. Number one, this was yesterday's price action. You can just see the heavy selling. And then look in the after hours last night, the S&P continued to sell off before bouncing back into today's open. And I think a lot of this, right, because Amazon is still down substantially on the morning session, nearly 10%. So you can't say, oh, Amazon was the culprit for that after hours selling. What it really was de-risking. Silver dumped out last night down to $64 per ounce. Bitcoin, like I said, got to about 60,000. Both those assets have seen rebounds, which is giving investors confidence to buy stocks, at least for now. And I don't buy it, folks, meaning that, sure, I'm in longs for a technical bounce. I even picked up Bitcoin, IBIT over the last day or so, picking it up for a technical bounce. But I'm not seeing this being a long-lasting input. I think ultimately, based on chart analysis, we're going to see more downside to the next few weeks. Now, to go into that based purely on technical analysis, let's go to the charts, right? So here we have the chart. And this is something I warned about. I mean, literally, when we got back to this scene of the crime retrace, and you can see again, for those of you that are new, your low from April connected through all these subsequent lows. We finally broke support right there, retraced to the underbelly of it, which is now technical resistance. What does price generally do? It gets rejected off of that, which is exactly what we have seen. Now, from a short-term basis, look at where the S&P was. We were at this little pivot low. Okay, so we get a little bit of a bounce. My guess is we trade up to this gap fill, and then we roll over and make our next leg lower to this low pivot, right? And get a small bounce, then another leg lower, etc. But again, as long as we do not take out this zone right up here, then the path of least resistance is to the downside. And again, we're going to see this in other asset classes. In fact, you could argue that really Bitcoin put in a signal of a top. And this is something I've argued for a long time, that Bitcoin is a leading indicator. Okay, so for instance, in October, Bitcoin topped. The stock market, interestingly enough, the NASDAQ also topped in October, but the NASDAQ didn't roll over like the Bitcoin price. But now we're playing catch up. The stock market is going to de-risk as it's lower on the risk curve than Bitcoin, and even to a point silver, right? Silver had gotten so extended, it became a risk on trade. Now, obviously, that has unwound a majority of that move as well. All right, speaking of which, we looked at the S&P, but here's the NASDAQ, and I just want to point this out. When Bitcoin topped in October, this was your all-time high on the NASDAQ right there. Now, we kissed it right over here. We never broke the all-time high. In addition, if we look at this trend line, same sort of deal, right? You have the big move there, hits trend line once, twice, 3 times, maybe 4 times, then breaks, then retraces here, rejected to the downside. Classic case of breakdown with a retrace, support becoming resistance. But just like we just talked about, like if you look at Bitcoin here and we go back to that high, the high was on October 6th of 2025. The NASDAQ high put in its high on October 29th. So it even led the Bitcoin, or I should say Bitcoin even led the NASDAQ just by a shorter distance in terms of time frame versus the S&P or the Dow Jones Industrial Average. All right, so now, again, same thing. We're looking like we'll get a bounce today. Whether or not it holds on, I don't know. I still think we're going lower on the NASDAQ in the next week, likely down to about 21,900. And ultimately, I've said this now for weeks, even since January, I still think we're going down here on the NASDAQ before we get a significant longer-term bounce at about 20,000 from those high pivots. So basically, on a shorter term basis, just to talk about what I've done in smart money stocks with members in terms of my swing trades, we've really accumulated a fair amount of longs. Like yesterday, obviously, we were picking up some MicroStrategy as well as some Bitcoin via IBIT, and then also other plays out there that have been beaten down. In fact, we had Roblox going into earnings yesterday on the long side. We did close that out after hours for a great gain when it hit $75 per share. But either way, again, beaten down software stocks. I love Oracle right now. I know Oracle's not popular, but it's so beaten down. The technicals are so bad that they're good, if that makes sense to you guys. All right. So we'll see where that goes. Oracle's bouncing a little bit this morning. We can talk about that in a little bit, but let's flip over to the 10-year. This is the big deal here. So the 10-year yield got slammed yesterday. Now it's bouncing a little bit. Notice where it's bouncing. This was former resistance. Resistance here, resistance all through here. Here was our bull flag. We broke out, we retraced, we tried to make a move up, and then the jobs data came out in the last day or so. And just to refresh again, the Challenger job cuts. So we're not getting the non-farm payrolls report today. That'll be next week because obviously the government shut down for a couple days or whatever. But we did get the Challenger job cuts numbers for January, and it was shockingly bad. It was, I think, a loss of 108,000 jobs just in January. That was the worst number since 2009, which was the financial crisis, right? And so that spooked investors and made them run in to buy bonds. When investors buy bonds for safety, yields come down because you have higher demand, right? So demand means that they can offer a lower interest rate, aka while the 10-year dropped. This is going to be interesting in the next couple of weeks. Do we break down on the 10-year back below this? If that happens, I don't actually think that's good. Now, a lot of people would say, oh, well, mortgage rates will come down. Very true. But if it's breaking down, if yields are going lower because the economy is spinning in towards a recession, that's not going to be good. Remember, the S&P, and this is a key point today, the S&P has been able to justify, or at least analysts have been able to justify, these ridiculous valuations on stocks like Palantir, like Robinhood, which, by the way, have all crashed in the last few days because they're like, oh, well, the economy's good and we're going to continue to see growth in earnings growth. Well, all of a sudden, if we start to see something like a recession back on the table for, let's say, late 2026, earnings probably aren't growing. In addition, the CapEx spend by Amazon, $200 billion, Alphabet, $170 billion, that's going to eat into earnings growth, at least in the near term. And will they get the return on that investment? We don't know. But all of these companies are spending like drunken sailors, and investors are starting to question whether they will turn it into real growth later on. The point being is that the earnings estimates, if they come down a little bit, the stock market will have to correct as well. And there's a long way down to go to bring it in line with a potential recession. I'll say that much. Okay, back to the charts we go. Amazon today, folks, is down. You can see the dump on earnings. Their guidance was very, very weak, and also announcing $200 billion of CapEx, capital expenditures, in 2026. That is just a hard pill to swallow. Here we have again this morning, it's bouncing a little bit with the market. We're still trading around $203. Again, that's about a 10% drop on Amazon. If we zoom out, I've already isolated my beautiful trading level today. Look at this, guys. Beautiful. Look at the size of that gap. That is a great level here on Amazon. There was a gap right in here. Price closed there, opened the next day there. This would be a gap fill on Amazon at 193.25. And as a trade today, absolutely, I'm looking to play that. No doubt about it. Okay, going on to Roblox, you can see that pop on earnings. We unloaded up in this range. It's actually come in quite a bit. I would be interested in swing trading this again if it comes back to the flat line. All right, now it could go as low as, let's say, $50, major support down there, but this is a beaten down name. Again, bouncing just under 10% today. I'm going to keep an eye on it. It's hard for me to, so number one, any chart that looks like this, I'm not shorting on a small gap up because it could squeeze. At the same time, I'm not ready to go long, right? We just took it off the table yesterday at $75 and change on our swing trade in smart money stocks and ETFs. But at the same time, it's not low enough for me to re-enter until at least it flattens out for the day around 60. Then I might start nibbling on a small position. Roblox actually had really good earnings. But again, this is a software company, a la Oracle, a la all of these other ones. And those are not popular right now. Investors are shying away because of the fear that AI can make them somewhat irrelevant. Now, I'm sure they'll use AI as well, which will make them somewhat relevant again. But the point being is these are concerns for investors, which has driven Oracle down. I mean, Oracle has other issues too, like the debt that they're taking on to finance their AI spend. But Roblox itself is intriguing if it gets back to about $60 today per share, which would be a gap fill from the gap up. All right, Reddit reported earnings. The stock was doing pretty well, trading at 171, coming back in just a little bit. And what we can see here is, again, look at the drop. No way I'm looking to short this. All right, this is just asking for catastrophe if it squeezes to the upside. Maybe if you're aggressive right here, 179 or so right there, pivot low, pivot low. That would be the first level, and that's still about $20 away at this point on Reddit. All right, IREN fell initially after hours on earnings. Part of that also was Bitcoin, right? So IREN is heavily in crypto. So this thing collapsed yesterday after hours, partially on earnings, but more so on Bitcoin and crypto dropping. Then it's come back this morning as Bitcoin has bounced. Again, same sort of deal. You can see it's down near term. It's basically flattish to slightly lower. There's no trade for me on this. I would consider a swing trade on this if it gets down to about 26, and then another gap where I would add around just below $23, right down in this range. Gap fill right there and a couple key points. Now, speaking of crypto, guys, here's Bitcoin bouncing today, trading at $67,000 per share. That's after going as low as 60,000 in the kind of evening East Coast time last night. This drop yesterday was an all-out panic. And in fact, one of the things that I like to show you guys is volume. All right, let me see if I can bring up my volume here. Let's look at volume on this because this is important, guys. When I look for when I accumulate, you want to see panic. How do you see panic? And again, it might be hard for you guys to see, but you can see how big the volume candle was on Bitcoin. All right, when people panic and price drops this much, obviously there's way more volume in the market. And so while I still think there's a risk of Bitcoin coming down to as low as 35,000 over the next 6 to 12 months, I think short term, we're going to bounce back to 75 to 77,000 over the next couple weeks. All right. Now, again, that's basically only getting us back to this pivot low right here. Well, this is at 80,000, so it's not even that pivot low, but that would be the high end of the target. Really, we're talking about this. But look at the volume here, guys. If I zoom out, I don't know if you guys can see this, but if we take yesterday's volume in Bitcoin, it was the highest volume in Bitcoin since August of 2024, when Bitcoin traded as low as 50,000 right here on this big flush. So it was big volume yesterday, no doubt about it, folks. A lot of people got washed out. Altcoins, I mean, just decimated. Absolutely decimated. And this is one of the reasons why, while I dabble in swing trade in altcoins, I hold no long-term altcoins. And it's not that I don't like altcoins. I like them for short trades, short-term trades. But at the same time, I'm always worried about the technology that they're, the use case. Maybe a new coin comes out that supplants it. Versus at least with Bitcoin, we know it's kind of has institutional backing to a greater extent. And you can even look at the charts. I mean, I haven't looked at ETH with you guys in quite a while, but I mean, look at the drop on ETH. ETH even, and let me get rid of volume so we can see it a little clearer. ETH absolutely dropped $3,000 to $1,700 in basically a week and a half here. Now, this is my big buy level on ETH down here. All right, see these two trend lines? Major low from 2020. That's the COVID low. Here's your low here in that big corrective move in the bear market of 2022. That zone right there, basically between 1600 and 1500, that will be a significant accumulation zone. But keep in mind, I probably won't hold this long term. And it's not that I don't like ETH. I think ETH as the secondary player is still good. But mainly, if I'm going to hold something long term, I'm probably sticking to something more like Bitcoin. All right, let's continue on, guys. We got to look at silver. Silver on the daily chart. Look at this flush yesterday. It briefly broke below major technical support at 71.50, going as low as 64. It has recovered back to 75. I mean, literally in one day, silver has already traded in an $11 per ounce range. The volatility is unmatched historically here. I mean, again, maybe going back to the 79 period or so, but this is wild. Now, for me, do I think silver has bottomed? Again, it's good to see the bounce today. But one thing we're very quickly learning is that when Bitcoin sells and the stock market sells, silver right now is being dumped as well. And part of this is because of human psychology, right? So a lot of investors piled into silver at much higher levels, and they were buying it because it was a speculative trade. I heard crazy price targets out there. Oh, it's going to $200 an ounce. Oh, it's going to $1,000 an ounce. All of this stuff FOMO created, which gets people to jump in. It creates the greed aspect that takes something from a kind of a gold trade, which is more, safe haven asset, to a risk on trade. And so if silver's a risk on right now, listen, I still think silver can go back to being kind of a more of a safe haven trade. It just has to wipe out those players that bought in late for the easy score, which, by the way, I've learned this many times. There's no such thing as an easy score. When you think something's an easy score, that's always when I take my biggest losses. It's the overconfidence. It's the over leverage, right? So I'm always, aware of that. I'm very aware mentally when I think something, oh, this is a no-brainer. Wait a minute. What am I missing here in this trade? And you can see on silver what it does. But the point again is that when the stock market dumps out again, when Bitcoin may go lower, then silver, chances are, is still heading down. And I'm still sticking with my longer-term price target of $50 to $54 right in here, guys. That is my longer term target where I believe it will head back to. And just so you understand where I'm getting that from, it's from these two highs right here, right? So that would be a retrace to that support level. But then this trend line here is a trend line that goes back to 2011's high and also the high going back to 1979. And a lot of charts, by the way, this is very common. If you have a trend line here and price does this and it's rejected, and then it does this and it's rejected, right? And then it breaks out, what's the commonality here? And we've used this term multiple times today, retrace to the scene of the crime. There it would be right there. And then it can go on its next leg up. Now, there's no guarantees. I mean, maybe it doesn't go there, but I certainly will be a buyer if it does go to those levels. All right. So keep that in mind in terms of technical analysis. Now, looking at oil today, guys, oil flipping back to the daily chart. Oil's basically inching down. Now, oil fell yesterday. Why would oil fall yesterday? Is it a risk asset? Not really, but it is an economic asset, meaning that it's very aware of U.S. economic conditions. And what we saw yesterday with the initial claims, jobless claims filings jumping, then we saw Challenger numbers, biggest layoffs since 2009 in January. By the way, just to be clear, those layoffs in January were like 4 companies. Amazon, UPS. It was like basically 4 companies that made up which is really scary because there's a lot more companies out there. And if just 4 companies amassed 100,000 plus in layoffs, that does concern me. And by the way, it's not that the economy was slowing that dramatically. I mean, this is what's so scary, guys. It's not that the economy is slowing in that dramatic fashion. It's literally that AI is starting to be used more and more. And this is not going to be something that's short-lived. This is going to go on for years. As AI advances, layoffs are going to continue. And this is a real problem for the economy over the next few years, let's say 5 years or so. And I do worry that you're going to see, I do worry that in the next 5 years, we will see unemployment at 10% or greater, which is shockingly bad. But what is it going to do? AI will create higher margins for these companies. But also then a lot more of the population is going to fall to the middle to lower income if they can't get jobs. And so it's kind of like, and listen, I don't want to get into it. I'm not going to get into this for another video. I apologize for even broaching it because it's such an in-depth topic, but it is something that we as citizens, and this goes for the whole world. I know we have a lot of viewers from all over the world out there. You have to start being aware of this, folks. All right. It's going to create a much higher level of standard unemployment. There's going to be the haves and the have-nots, and we already see that in the world. It's only going to get greater because of this. And that's just something we're going to have to deal with and we'll have to figure out. Okay. All right. In any case, oil coming down, short answer here, oil coming down yesterday and today because the worries about the U.S. economy. If demand starts to wane in the U.S. because the economy is slowing, well, guess what? Oil is going to come in. As of now, it's still holding here, so I'm not really worried about the breakout coming back in, but it is something I'm monitoring on the charts. All right, lastly, guys, and you can see a little bit of a different view there, but we'll go back to the charts. I just want to look at natural gas real quick. If we look at nat gas not doing anything. If anything, it's starting to make a bear flag, down move, inside bar action, right? Now, again, it could continue like this before it dumps, but if this pattern continues, eventually it starts to change the probabilities to downside action. All right, guys, I've got to get going to my trading room. So, again, amazing trading. By the way, we held MicroStrategies overnight in the live day trading room, and we just made 33,000 on it in the trading room. Awesome. And it was just the panic made me confident enough to do that. Usually we don't hold trades overnight, but I was like, we got to do this. And we banked a great score on it. So if you're in there, I'll see you in just a few minutes. We'll day trade today and make some more money, hopefully. Otherwise, come find us at verifiedinvesting.com where it's all charts and no BS. You guys have a great rest of your day. I'll see you later for the weekly wrap up. Take care.